Hi, I'm Chris Parry, founder and president of EQUITY.GURU. Today's speed run is why I hate crypto exchanges, and specifically Coinbase. Look, there are many reasons to hate Coinbase, but if I'm really honest about it, it's nothing personal about Coinbase. Coinbase is just a big symptom of a larger problem, and that is that crypto exchanges suck in general. The idea that if I'm going to give you $5 worth of cryptocurrency, I need some exchange in the middle of that transaction to facilitate it and take a 4% skim off each side. Fuck that. That is the reason why cryptocurrencies will never replace actual currency. Until that piece of old archaic technology is removed and I can do a P2P trade with you without any risk, there's no real use for cryptocurrency other than as a store of wealth and as a gigantic pyramid scheme that relies on more people coming in at the bottom so that the guys at the top can cash out. When 40% of the crypto coins in the world are owned by 1,000 people, that's a dead currency. It's a broken system. It doesn't allow you to actually do the things that crypto promises to do. And so at the middle of that, you've got these exchanges that have to be used to facilitate transactions. And, for the most part, the little exchanges will take, 0.25%, 0.5% of your transaction as a fee. Coinbase goes to 4%. Coinbase just says, we're big and we're going to tax you more because of that. The reason most people use Coinbase is because security, they figure, comes from being involved with the biggest exchange. Well, tell that to the guys at Quadriga, tell it to the guys from Mt. Gox, tell it to the guys that have seen their money disappear in 75 different exchanges that all went bust in 2020. 75 exchanges. Some of them got hacked. Some of them just gave up. Some of them ran out of money, went bankrupt. Some of them had regulatory takedowns. Are you really, really trying to tell me that I should put part of my bank account into a crypto exchange and then when it disappears, there's nothing I can do about it? I was involved I had an account at the Einstein Exchange, a local Vancouver-based crypto exchange back in the day. A couple of years ago, they just decided, hey, if you want to withdraw any money, you've got to come to our office and fill in a form and bring your ID. Doesn't matter if you're in Brazil, you got to fly to Vancouver, get to their office during office hours, hope that someone actually opens the door, fill in a form, and you can have your money in a couple of weeks. Well, so I lost $5,000 in that mess. And when it came right down to it, the regulators, the financial market regulatory system didn't give a shit, right? They did some marginal, let's take them to court and get some money back, but they never really pressed on it. The guys just moved. The guys that ran this thing, they ran out of money and they moved. And it was only a year after they started. So my 5K in coin, out it goes. I can't track it down. It is gone. And this has happened again and again and again and again. So why do people keep using crypto exchanges? They don't, for the most part. For the most part, they're using Coinbase because Coinbase is the biggest one. Well, so tell me this. If the 1,000 guys at the top of the crypto pyramid ever decide that enough is enough, time to change their money into actual funds, into actual dollars, and crypto takes a 50% shit overnight, what do you think happens then? Well, chances are everybody goes to Coinbase and says, I want my money out. I don't want to sit there while this is happening. Give me my money. There's other things I could invest in. And you know what happens? Nothing. You're not going to get your money because every time there's been a little mini run at Coinbase, their system goes down. Anytime there's a situation where people are making mad profits and are likely to pull those profits out, the system goes down. It's very suspicious. You know what happens at a bank if there's a run at the bank? Nothing. They have the money to give you what you want back, and they have systems that don't allow them to get rid of more money than is necessary to cover your account. And if something does happen and goes down, we'll get the $250,000 is federally insured. Okay, so if you go to a broker, a real broker, not Robinhood, not some skanky ass free wealth symbol, but a real brokerage house, you have protections. They'll make you jump through a bunch of hoops to get your money in, but you have protections. If you go to a bank, put your money in there, they have protections. What happens at Coinbase if everything goes to shit? If someone hacks it and takes $200 million worth of currency, including yours, you lose. It's gone. So this whole thing to me is a fucking joke. The fact that Coinbase has now gone public and has a $60 million valuation, bonkers. Because realistically, you're looking at about 200 times earnings for the valuation that Coinbase started at. Now, I've gone through a little bit of detail as to why I think exchanges suck and why I think Coinbase sucks. Let's get now into the real nitty-gritty of it here, and then to why I really have a burr in my saddle about Coinbase, and that is how it went public. Look, first of all, a lot of people who are involved in cryptocurrency are doing so not because necessarily they're going to make money out of it. Some people are, some people aren't, but most people want to see the end of the Wall Street system, right? A whole new system of currency. It eats away at Wall Street. It eats away at the governments and regulators. It's a new thing, power to the people. Cool, I can get behind that. Here's the problem. Coinbase is not fighting the system. Coinbase is the system. Coinbase was funded by venture capitalists, Andreessen Horowitz, etc. Bunch of money given to them to pump this thing up. And most of the stock is owned by 50% of the stock is owned by employees and insiders and financiers, right? And management. So there are two ways realistically to bring a big company public in the US. One is an IPO. An IPO is a financing event, right? It says we have 100 million shares of a company owned by the company, and we're going to sell those to people. And the price that it's going to be bought at is going to be dictated by how much demand there is to get that thing out there. The money then goes to the company, which then grows. It does things with the cash. This is a good system. I mean, as good as it can be. Chances are most of the value's already been extracted out of the company by the time it goes to its IPO. The people that are making money are the insiders, the underwriters, the financiers. They're coming public because they're looking to get some of their cash out, but mostly as a means of bringing more cash into the company so it can grow. Now, direct listing is a different story. Direct listing is a liquidity event, which means that the guys that finance the company are getting the fuck out. All the shares that are available at that event are shares that are presently owned by insiders, right? So what's happening is if those guys really think this company is undervalued and is going to bounce 10x from where it is, then it's selling shares. And what happens with the direct listing when no one's selling? It shoots. It goes flying, right? So ideally what you want in a perfect world is for everyone to make money. You want this thing to come out in its direct listing. No one's selling. People are buying, and that thing starts just catapulting upwards. Didn't happen here. You know why? Because it was already priced at around 200 times earnings. Now, when this thing came out with this direct listing, the people putting it together set out what did they call it? It wasn't a reserve price. It was like I can't remember what it was. It was like an indicated price of $250, right? So it's $250 a share was what they said. Well, this is where we're starting at. And then when the thing came out at $380, they were like, wow, what a great result. It's gone up so and so many percent. It didn't go up any percent. No one was actually buying or selling for $250. $250 was a bullshit amount set in place that they knew was way lower than the demand so that they could claim on opening day a plus movement. In actual fact, it was a downward movement. It started at 380, hit 400, ended the day at 320. That's a down day, right? That's a broken direct listing, broken IPO, as Scott Galloway would put it. Now, to me, that's a big failure, but somehow to the company, it was being spun as a big win. A big win. Well, it was a big win for the venture capitalists who dumped their shares on that day. It was a big win for the CEO who dumped his shares on the day, for staff members who dumped their shares on the day, and all the knuckleheads, all the guys out there, you and me, who were going out and saying, well, we should buy Coinbase. That looks like a good investment. We were cashing them out. The insiders who know more about the company than anybody, you guys were cashing them out, right? Now, if they think this thing's got a good future, they're not selling a share. It doesn't matter if there's not enough shares to buy. That's good. That's a positive thing. That creates demand, creates upward movement. But they were saying to you, this price is a max price. We are getting out from 380 all the way down to 320. It's now down to 280. This thing shrinks every single day. Now, who's buying Coinbase? I tell you, idiots are buying Coinbase. Grandpa's buying Coinbase. The same people that buy Canopy Growth Corp because it's the biggest cannabis company, even though it loses a bucket load of money every quarter, it burns money every single quarter. It doesn't make nearly as much money as other companies, and they still keep buying it. Why do they buy it? It's the same reason Grandpa buys freaking BMO. It's the same reason he buys Air Canada, Bombardier, because it's a big local Canadian notable name. But those companies don't perform better than the market. Those companies generally suck. So why do they keep going to them? Because there's this theory, this myth, that size creates security. Size doesn't create security. Size indicates that someone's already got the value out of this thing. I don't want to pay $16 billion for Coinbase at 200 times earnings when Twitter is $40 billion. Ford is $45 billion. Viacom, $49 billion. Why wouldn't you want to have those companies that actually generate revenue and profits and a real world thing instead of putting your money into a fucking crypto exchange that at the flick of a pen could be outlawed, could be drowned out with capital gains tax, could be regulated to hell, or could just disappear like all those other ones did? Why on earth would you put any stock at all into Coinbase stock? I just don't understand it. Anyone who has bought this thing so far and held it to today has lost money. The only people who have made money are the guys cashing out, and they are the guys that are closest, who have the best indication of whether there's a future in this thing, and they are selling. Like, if I'm wrong, why the fuck is anybody on the inside of Coinbase selling stock? Well, I tell you right now, the only stock that's being bought is stock that is sold by Coinbase insiders. Guys, this is rocket science. This is a mess. So what's going to happen? What do we do? Do we not trade crypto? Do we not buy Coinbase stock? I would say if you're going to buy Coinbase stock, make it a trade, man. But there is downward pressure on that thing. It is way overvalued and has been from the start. Crypto itself, you want to buy into crypto? Look, sure, there's money to be made. It's very volatile. It's all over the place. Right now, Dogecoin is worth more than than Coinbase, right? So Dogecoin, a coin that has no real functional use other than as a lol, is up hard enough that it is actually got a heavier market cap than all of Coinbase does. So we get to the bottom of this thing is what I'm actually looking for here is, look, there's still trades to be done in crypto. You're going to make money in crypto, but understand that it's tulips, right? You're not buying the future of currency. You're not buying some advantage over fiat. You're just buying a thing that more people are buying than selling currently. Okay, Dogecoin is the perfect example of this. There's no functional use for it. It will never be a thing that people bring into the financial system. It is baseball cards. It's fucking 70s band t-shirts. It's a collectible. And right now there's more people collecting than there are cashing out. But that will not always be the way. At some point, the top will wobble. Someone's going to try and tax this thing, and it's going to go on a free-for-all dive. Okay, the majority of crypto is owned by just a handful of people. And when they decide that they need a bigger yacht, the whole market craters. This has happened again and again and again. And when it happens the most is when grandpa is in, right? The last time the grandpas were buying crypto and buying anything and everything because, hey, it could never lose, big time, down it went. Everyone cashed out. Everyone got scared for a year or two. Now they're back. They've forgotten the lessons, and they're looking at it and saying, quick, you got to get in. You're going to make so much money. Everyone's going to be rich. Dude, this has happened again and again and again. It's a bubble. It's going to burst. When it bursts, Coinbase is going to shit the bed. So what do we do? What are we looking for to replace Coinbase? There's people out there that are working on technology to facilitate person-to-person, peer-to-peer trades in crypto. When that happens, if that can be done in an elegant way without someone jacking a massive fee out in the middle of it all, when we can get to a place where we don't need Coinbase anymore, that crypto becomes a lot more ironclad, a lot harder to police, a lot more likely to be successful, and it's going to get its third wind where it's going to start really blowing up beyond where it is right now. I don't know what that technology is, but that technology is being worked on. I guarantee it. Someone's going to make it work, and when they do, either Coinbase is going to buy them for tens of billions of dollars, or Coinbase is going to collapse like Blockbuster real quick, despite being the biggest, despite all the grandpas investing in it because they don't want to do the research as to what's actually undervalued. Coinbase is going to be extinct. It's just a question of when. That's my speed run for the day.